Everyone. I hope you're doing well. Welcome to a session on company audit. Let us wait for a couple of minutes for our friends to join. All right. Somebody who just joined in can confirm whether you can see me and hear me well. Could you please do that? Can somebody just confirm whether you can see me and hear me well? Okay, great. Great. All right. Let us just wait for a minute and then we'll start our session. A quick revision or a rapid revision session on company audit. You can share this link with your other friends who you think will stand to gain from this session. All right. Okay, let's get started, friends. So today's topic, as you know, is about company audit. I hope everybody downloaded the material of company audit, which we have on the OneFin app. I hope everybody has a copy of that. Can you please confirm? Yeah. Do you have a copy of the notes as we are starting this? Yep. Excellent. Please download that. Salim, you can download that from OneFin app. You have the notes section where notes of company audit is available. I mean, in fact, notes of entire auditing is available. You can get access to that. Yeah. All right, friends. Let's get started. Can anybody tell me how many marks is it for old syllabus? See, it's pretty much similar syllabus, so don't have to worry about it. Okay. So the bulk of syllabus between old and new is same. So don't worry about it. Most of it will be covered even for you, right? In terms of company audit question. All right. Now, quickly, can anybody tell me for how many marks we have company audit in our examinations? Of course, it's a range, but just to have a clarity on the kind of weightage that we need to bear in mind as we are doing this. How many marks do you think company audit gets tested for? 10, 15, 20, 25, 12, 30 to 35, 20 to 25, 20 to 25, 20. All the answers are right because nobody knows for how many marks it will come, but what we know is for sure 60 and overaction. Right. So definitely not 60. Right. So, it's anything above 10 marks. There are exams where company audit got tested even for 25, 30 marks. So, but, again, let's take it on a conservative basis. 10 to 15 marks, more or less, you see from company audit, generally in your examinations, right? That's more or less like table stakes. So you have those 10 to 15 marks. And this 1 to 1.5 hours of revision, rapid revision to earn the 10 to 15 marks minimum is a good value for money proposition, right? So a very few 1 to 1.5 hours we spend will give us the marks what we are talking about. All right. So with that, let's get started. Just to set expectation, friends, this session is not with an expectation that you never heard about this chapter called company audit. You should have already done some level of understanding of company audit. This is a rapid revision. This rapid revision will make sure that you become thorough with those important points of company audit. And what I'll have to do is, because it is a rapid revision session, I will prioritize some topics over others. And if you listen to all these topics, you will definitely feel much more confident about these, roughly about 15 marks, which, might get tested from this chapter. All right. Okay, let's get started, friends. It's about 5 minutes from the time we started the session. Now we are deep diving into the topic, right? So, qualification of auditor. One quick point before we get into this. Should you necessarily remember the section number? Not required. By mistake, if you remember the section number, can you write that? Yeah, please write that. If you are unsure about the section number, what to do? Don't quote. That's all. Okay. So write the section number only if you are super confident about it. Otherwise, it's super okay. Just write what the topic is. Do not necessarily write the section number. Right. And I wouldn't be emphasizing on the section numbers as I'm doing this rapid revision. Right. Now, eligibility or a qualification for an auditor. Who is qualified to be an auditor? An individual, a CA holding COP. Individual, CA holding COP. What should you remember? CA holding certificate of practice is eligible to be appointed as auditor. If it is a firm, majority of the partners should be CAs having COP. That's it. Okay. So again, qualification, CA having COP is eligible to be appointed as the company auditor. If it is a firm, majority of the partners should be CAs having COP. Now, that means that in your firm, which is going to be appointed, there might be people who are not chartered accountants who are still a part of the firm. But the only point is, for that firm to be appointed as auditors, majority of the partners should be CAs having certificate of practice, right? Then can an LLP be a partner? Yes. Can LLP be an auditor? Yes. An LLP also can be an auditor, right? So there is a firm where there is I'm just discussing case studies also quickly. Okay, right? There is a firm where Mr. Preksha wants to. One person called Preksha, who is a member of ICI, who doesn't have COP, wants to be appointed. He is appointed as auditor. What happens? That appointment is not valid. Okay, that appointment is not valid as an auditor. Right. Now, how do you frame your answers? Friends, I tell this even in the classes. 3-step format or 3-step framework is a very simple way to present your answers. Step 1 should be about the relevant provisions. Okay. So if the question is Preksha, a CA having a CA who doesn't have COP is appointed as auditor, comment, right? Then what should your response be? Your response should not start as, no, how is that possible? Get the hell out of here. No, don't start. Don't get animated. First, you have to start with the provisions. As per the provisions of Companies Act 2013, individual who is a CA having, who is chartered accountant as per Chartered Accountants Act, having COP, certificate of practice, is eligible to be appointed as an auditor. Right. Step 2. That is basically the step 1. Step 2. Of course, you can also mention if it is a firm, majority of the partners should be CS having COP. Right. What is step 2 in the given case? What is the given case talk about? That is step 2. Step 2 or para 2, however you want to call it. In step 2, you will basically talk about Preksha is a chartered accountant. However, it is given that Preksha does not have certificate of practice. Right? That's all. Conclusion. Step 3 is conclusion. In step 3, you will say, as discussed above, appointment of Preksha as the auditor of company is Preksha cannot be appointed as auditor of the company. Or if the appointment has already happened, you will say Preksha's appointment is disqualified. Okay, right. So now do not worry about the way in which answers are given in the practice manual or something else, because you can't by heart them, friends. Let's understand. You have to just remember this 3-step framework. What are the relevant provisions? Then what is the summary of given case? And third one, or basically summary and analysis of given case. And the third one is conclusion. Okay, right. So that's about the first case. Now let's look at the disqualifications. Who is disqualified from being appointed as auditor? Friends, in a question you have to check. Qualification is different, disqualification is different. So disqualification, body corporate cannot be appointed as an auditor. Is LLP a body corporate? Can somebody tell me, is LLP a body corporate? Is an LLP a body corporate? No, no, yes, no, yes, no, yeah. That's the kind of answers that I love the most. You all know me well now, right? Okay. All right. Okay. Stop it, guys. Friends, an LLP is a body corporate. Please get it right. Okay. An LLP is a body corporate. Even though LLP is a body corporate, yes, it's a limited liability partnership firm, but it's a body corporate. Even though it is a body corporate, it is not, an LLP is not disqualified from being appointed as an auditor as long as majority of the partners of the LLPs are CAs having COP. That's all. I'm repeating. LLP is a body corporate, but LLP is not disqualified. While body corporates generally are disqualified, LLP is not disqualified from being appointed as auditor, provided majority of the partners of LLP are CAs having certificate of practice. Right. Then OE of the company, officer or employee of the company. I call it OE of the company. Okay. Then third point, PE of OE, partner or employee of the officer or employee of the company. Okay. Right. So basically it means partner PE of OE, partner of officer, partner of employee. Then PE, right? Employee of the employee, employee of the officer. Like this, you basically have 4 points packed into that, right? Then they cannot be appointed as an auditor. Why? Why do you say that officer of the employee, officer or employee of the company can't be appointed? PE of OE cannot be appointed as auditor. What is the main reason? Why do we have this disqualification? What will happen if they're appointed? What will happen if they're appointed? Excellent, Apurva, right? So that compromises the independence of auditor. That is why we don't talk about such appointments. Brilliant, brilliant, brilliant. Yes, yes, yes. So their opinion might be biased, right? An auditor has to give his or her opinion in a manner which is independent. In fact, I mean, while our study material, practice manuals, all these are filled with he will give his opinion, he will give his opinion. And unfortunately, the world is like that. But I wish while you are reading that word he, you have to read it as he or she, so that you in your head will become a more inclusive person, right? And then, yes, yes, yes. I think we got that point, right? Let's move on to the next one. A person who or his relative or partner, okay, holding any security of or interest in the company, its subsidiary, its holding or associate or any fellow subsidiary. Okay. Basically, if this person who is appointed as a chartered, who appointed as auditor, or his relative or partner, okay, that person or relative or partner, has any security or basically interest, where? In that company or its holding company or its subsidiary company or its associate company or its fellow subsidiary company. Friends, are you clear about this? That person or relative or partner has any securities or interest in the company, its holding company, in the subsidiary company, in the associate company or fellow subsidiary companies, then this person is disqualified from being appointed as auditor. That is the rule. Okay. Now, exception. Okay. Is everybody clear about the rule? Person, relative, partner. Okay. That person's relative, partner has any interest or securities in the company, holding company, subsidiary company, associate company, fellow subsidiary company, right? Then who is disqualified? That person is disqualified from being appointed as the auditor. Excellent, right? So friends, as I said, this is a rapid revision session. We have to go a little fast compared to what we do in our normal sessions. So I hope you appreciate the speed at which we are going. Right now, who is disqualified? Now, while normally we say this person is disqualified, there is an exception. If a relative, right? If a relative has securities in the company of face value less than or equal to 1 lakh. Not exceeding 1 lakh means, see, this goddamn thing, English is a little confusing as a language. Not exceeding 1 lakh is not something which our brain can process so easily. Please convert that into a mathematical formula. Less than or equal to 1 lakh. So if relative has any securities which have face value less than or equal to 1 lakh, no problem. Okay, right. Now, when I say relative, if the person only has securities, disqualified. Okay, this exception applies only for relative. If that person's partner has any securities in the company, or in that entire list, anyone, disqualified. Okay, 1 lakh concession is given only for relative of the person who is proposed to be appointed as auditor. I hope everybody got this point with crystal clarity, right? Then, now sometimes if the relative acquires, by the way, one more point, that 1 lakh is the face value, right? Not number of shares. We are talking about face value of shares. Okay, we are not talking about market value. We are not talking about book value. We are not talking about the number of shares. We are talking about the face value of shares. Okay, right. Then, if the relative acquires security or interest of face value exceeding 1 lakh, then what should happen? Within 60 days, that limit should come down below 1 lakh. Otherwise, this person, whoever is appointed, is deemed to have vacated office. Means even though that person is sitting like this in the chair, for the purpose of law, that person is deemed to have vacated office on account of this disqualification. Okay, right. So after appointment, something like this happened where the value went beyond 1 lakh rupees. Then within 60 days, it has to be brought down. Now you may ask a question, sir, how the hell do we know what shares my relative bought, right? If my brother buys any shares, if my sister buys any shares, they need not tell me, right? So I understand, but the point here is, as long as it is in your knowledge, right? So that is the little gray area, you can say that way. As long as it is in your knowledge, then these clauses will apply, right? Then look at the other point, indebtedness. So first point is about, one point we spoke about securities. Now about indebtedness. The person, whom are we talking about? The person, relative or partner is indebted to the company or its subsidiaries, holding, associate, fellow subsidiary for an amount exceeding 5 lakh rupees. Okay, indebted, for amount exceeding 5 lakh rupees. Now, this 5 lakh rupees limit, if the amount of indebtedness, okay, let me put it like this. If we are indebted to the company, or our partner or relative is indebted to the company for an amount of 4 lakh rupees, what does it mean? If we are indebted for an amount beyond 5 lakhs, we are disqualified. If we are indebted to the company for an amount below 5 lakh rupees, like say 4 lakh rupees, then what will happen? What will happen then? Qualified. Qualified is being short here. Friends, that is where we are doing these sessions to correct our vocabulary. You should not say, in that case, the person is qualified. You should say, we are not disqualified. We are not reading the qualification criteria. We are reading the disqualification criteria. These are the kind of things where you feel you have written your answer well, and the examiner straight deducts 1 mark because it's a blunder. It is not a small mistake. Okay, so just be careful about this terminology. If the amount of indebtedness is below 5 lakhs, less than or equal to 5 lakhs, actually, if it is equal to 5 lakhs, what will happen? If the amount of indebtedness is equal to 5 lakhs, what will happen? If the amount of indebtedness is equal to 5 lakhs, what will happen? Disqualified, not disqualified. Disqualified, not disqualified. My dear friends, this is exactly why we have these sessions, to get your concentration better on these important points. This person will be disqualified if the indebtedness exceeds 5 lakhs. If the indebtedness exceeds means greater than 5 lakhs. If it is less than or equal to 5 lakhs, there is no disqualification. If it is less than or equal to 5 lakhs, there is no disqualification. If it is greater than 5 lakhs, then there is disqualification. Is everybody clear about this point now? Right? Something which looks so obvious, we just keep reading and we skip and keep moving forward. But see how many people kind of got it wrong. Okay, my dear friends, is everybody comfortable with this point now? Can I move to the next one? Qualification, disqualification criteria get tested very frequently in our examinations. Okay, right. Great. Okay. Now, look at the third one. The person, acha, tell me, the person, that person's relative or partner has given a guarantee or provided any security in connection with indebtedness of third party to the company or its subsidiary holding company, blah, 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 for an amount exceeding 1 lakh. Now, in the third case, what are we talking about? Basically, these people gave a guarantee. We are not indebted. We basically gave a guarantee for a loan that someone else took from the company, and that amount is, the amount of guarantee is more than 1 lakh rupees. Okay, right. Now my question. Okay, think about it. There is, concentrate carefully. There is a small trick point I'm trying to ask you here. Has given guarantee or provided any security in connection with indebtedness if of third party to the company, etc., for more than 1 lakh. Now concentrate carefully. There, I want to be appointed as auditor of this company. Okay, my friend Manoj wants to take a loan from this company, and he took a loan of 5 lakh rupees from this company. I gave a guarantee for 10% of the loan. I gave a guarantee for 10% of the loan. So 5 lakhs is the loan. So I gave a guarantee for to the company on behalf of my friend for 50,000 rupees. The amount of borrowing is basically 5 lakh rupees. But the amount of guarantee what I gave is only 50,000 rupees. Is this a disqualification or is it not a disqualification? What do you think? Disqualification or is it not a disqualification? All right, you are getting it right. You're getting it right. So it is not a disqualification because the amount of guarantee should be, if it is less than, again, if it is greater than 1 lakh, disqualified. If it is equal to 1 lakh, if the guarantee amount is equal to 1 lakh, if the amount of guarantee is equal to 1 lakh, then not a disqualification. Very good. Very good. Friends, this is the kind of attention to details you should have when you are doing company audit. My humble request to you all, company audit, these kind of limits, whatever you see, you have these amounts, you have dates. You please write them down at one place. Maximum it will come to 2 sides of a page. Okay, it will come 2 sides. And it will take, once you learn this properly, it will take you hardly 5 minutes to revise all these. Okay, it will take you just 5 minutes to revise all these. So please, for God's sake, do write these down at one place and revise them multiple times during your preparation. Okay, friends, I hope everybody is clear about this. Right now, great. I hope, I think you can stop answering now. Excellent. Right. All that I requested you to do is write these things down at one place. Limits for this: greater than or equal to, less than or equal to. you should be exactly right. You can't be almost right. Almost right is wrong. Remember, almost right is wrong. You have to be exactly right. Okay, that is when we can score good marks in the exam. Right. Come to the next one. A person or firm who, whether directly or indirectly, has business relationship with company or its subsidiary or its holding, blah 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 blah. Okay, a person or firm. Okay, this, while in the clause relative is not included, in the clarification it is given same person relative or person relative or partner. Okay, they basically have a business relationship with the company. That entire gang, that gang of companies, I call them gang of companies, is company, its holding company, its subsidiary company, its fellow subsidiary company, associate company, all these put together, I'll call them as gang of companies. Okay, so if the person, the relative, partner, this I will call as group of people. Okay, so these group of people, if they have any direct or indirect business relationship with this gang of companies, okay, then this person will be disqualified. Now it's something like group of people, gang of companies, right? So again, if this group of people are providing CA services, right? One of the persons here is basically the person who wants to be appointed as auditor. Maybe their firm is providing some CA services. Then don't say necessarily say that it is a disqualification. Okay. Then, if these group of people are kind of they have a business relationship with company which is pretty ordinary in nature, right? For example, this is a chain of restaurants. The company is basically into a chain of restaurants, or it is a cinema theater, right? It is PVR. Now, how can you not watch a movie? I mean, unless COVID hits and we don't get to watch in a theater, how do you not watch a movie in a theater, right? So there is a good chance that you would have probably gone and watched a movie in PVR. Now, suddenly you can't say just because you watched a movie in PVR, there is a business relationship. That is not called business relationship, even though you purchased a ticket from PVR and watched that movie. That is way too ordinary in nature. So that is permitted. Okay, right. So it's something like when I say business relationship, what kind of examples should you bear in mind? These people are the main suppliers or the main customers. So like that kind of relationship where the influence of one party on the other is expected to be high. Okay, so such relationships we call as a business relationship. Okay, right. Then a person whose relative is a director or is in the employment of company as a director or key managerial personnel. A person whose relative, I want to be appointed as auditor of that company or basically that gang. Okay, now my relative is a director or a director having who is a key managerial personnel, basically somebody like an MD or whole time director or somebody with a lot of power in the company. Then what can happen? My opinion can be influenced by that person, right? That is why in such cases I will be disqualified from being appointed as an auditor of that company. Then a person who has been convicted. Should we quote section numbers? I already answered this question, Shailu, at the start of this class itself. We don't have to necessarily quote section numbers. A person who has been convicted by court of an offense involving fraud and a period of 10 years has not lapsed since the date of conviction. Two things you have to bear in mind. Person should have been convicted plus, and means plus. Okay, what should have happened? From the date of conviction, 10 years has not lapsed. We are not, okay, listen to a case like this. Miss A wants to be appointed as an auditor of PQR Limited. Listen carefully to the question. Miss A wants to be appointed as an auditor of PQR Limited. There was a case filed against Miss A on, say, 1st of January 2008. There was a case filed against Miss A on 1st of January 2008. The appointment is happening on 1st of January 2020. Okay. Is Miss A eligible for appointment? What is your answer? Okay, you are basically saying not disqualified. Everybody, I planned a perfect sketch, and everybody fell into that sketch. Very good, very good. I think a couple of them kind of got my trick. They're saying, sir, it is not the date when the bloody case is filed. It is what is relevant. The date of conviction. You understand? That is the kind of attention to details. Friends, in this 1.5 hours of session of company audit, I am not expecting that I will cover every nook and corner of Companies Act. But what we will do is we will build the mindset to read company audit. Okay, the attention that you should have to read the company audit is different. So I'm saying, yeah, case was filed, but that is an irrelevant date. The next question you should ask is, when was the date of conviction? Maybe she was never convicted, right? Or maybe she was convicted on, as you know, in India, cases go on for 2 to 3 generations, right? So maybe she was never convicted, right? So just because a case, see how easily you can fall into the trap. The problem is, if you don't learn perfectly, you will feel that you wrote the answer well. You will feel, I wrote the correct answer and came. And even after seeing the suggested answers, you feel, yeah, same. That's what I wrote. But examiner is analyzing the answers differently. Okay. So considering that, my dear friends, please be double, triple attentive when you are doing company audit topics. Okay. So company audit questions means slow down. These questions will be small. These questions will be like one-liners. They'll be tricky. You need to get them right. Okay. Friends, I hope everybody understood how you need to respond to this. Then look at a few more points. A person who is in full-time employment elsewhere, or a person who is holding appointment as auditor for more than 20 companies. Full-time appointment elsewhere, or is holding the auditorship in more than 20 companies. Fine. Who is in prison, however? What if the person is in prison, however? You deceived people. You told written of if. You tutored students. Okay, thank you, Shruti. Please go and talk to the team Indigo Learn. If there is a problem, if there is one organization who makes sure that we honor our commitments, it is Indigo Learn. Shruti, maybe there is some confusion. Please, take it on record. Okay. If there is any problem, we will do the necessary adjustments or whatever is the commitment given. So please talk to the team. If you're trying to do the show blasting or show bombing here, it's not a great idea. Okay, right. So all right, let's continue. Right, let's move ahead, friends. Let's move. We said if a person is, what is the other question? Person is in prison, however 10 years lapsed. See, basically from the date of conviction. See, from the date of conviction you have to count this. It's not from the date of prison. All this, forget those nonsense here. Just from the date of conviction. Right. Now let's move on. So we spoke about a person who is in full-time employment elsewhere. Okay. Person who is in full-time employment elsewhere all right, Shruti, please leave your mobile number here. The team will get back to you and talk to you and make sure that it is addressed. There must be some confusion. I can take it on record. We stand by the commitments what we give 100%. Okay. So please don't interrupt the flow of class. This class is not to discuss the student complaints. Maybe there is a problem that will be addressed by the admin team. All right. Thank you. Now, let us move ahead. Now, moving ahead, any person whose subsidiary or associate or any other form of entity is engaged as on the date of appointment in consulting specialized services provided in 144. See, what is this 144? Friends, listen. This 144 is basically a list of services. If you are providing those services, basically we will consider that ye to management banda hai, right? So this person is management. A fellow who is providing services given under 144 is considered to be part of management. A person who is part of management cannot now come and do the audit of the company. All right. So considering that, please check if there are any services provided in 144. If this person is already doing the services, that person is disqualified from being appointed as an auditor. Okay, now please come to the case studies. Let us do rapid fire on these case studies. Everybody get to the case studies. Mr. Amar, a chartered accountant, bought a car financed at 7 lakhs by Chaudhary Finance Limited, which is the holding company of Charan and Das Limited. He has been statutory auditor of Das Limited and continues to be even after taking loan. Is it permitted? Is it permitted? Look at this. Which criteria are we talking about? We are talking about the indebtedness criteria. Okay, we are talking about the indebtedness criteria. So under indebtedness criteria, if the amount of indebtedness is greater than how much? 5 lakhs, right? If the amount of indebtedness is greater than 5 lakhs. So please write that point. Step 1 is person, relative, partner, group of people, then gang of entity, group of people, gang of companies. Gang of companies, we have the list also, right? So those 5 companies, 5 categories. So if the group of people have any indebtedness exceeding 5 lakhs, we are going to be super laser focused. Loosely remembering 5 lakhs is not enough. Greater than 5 lakhs. Okay. If the indebtedness is greater than 5 lakhs, then disqualified. But here, what is the amount of indebtedness? Oh, it's greater than 5 lakhs, right? It is greater than 5 lakhs. So because it is greater than 5 lakhs, then okay, Shruti, I humbly request you. I understand there is a concern. My request is, this is not the forum for you to clarify your concerns. Please take it up with the admin team. Please understand, this is interrupting the flow of class. Okay, so unless you want to do a protest here, I don't think this is the right forum for you to really fight. We are, yeah. Okay, so yeah, we will, there is an admin team which will take care of these issues, right? So if there is some concern, we will deal with that. But kindly do not interrupt the class. It is slightly unfair. You are being unfair to so many people who are here. Our intention is not to be unfair to you. Your issue will be resolved, but please don't interrupt the flow of class. Okay, right? Thank you. So here, friends, because it is more than 5 lakh rupees, this is under a disqualification. So now basically, friends, what will happen? Because there is disqualification, at the time of appointment, please get this point right. At the time of appointment, if this person is disqualified, you will call it disqualification. After this person is validly appointed, if this person meets any of these disqualification criteria, what will happen? That person automatically stands to have vacated the office. The office of that auditor stands vacated. That is how you should understand it. I'm repeating, friends. If at the time of appointment, if this person has this kind of loan, etc., all these you get to know, then you will say this person is disqualified. But after appointment, if any of these disqualification criteria are met, then it results in the office of that auditor immediately being vacated. That vacation we call as casual vacancy. Okay, we don't call it holidays, we don't call it Goa trip, we call it casual vacancy, right? Okay, then let us move to the next one. An auditor purchased goods worth 5,01,500 on credit from a company being audited by him. Company allowed him 1 month credit, which is normally allowed to customers. Yeah, it's normally allowed to everybody in the business, right? So is it acceptable? Friends, again, group of people, gang of companies, indebtedness greater than 5 lakhs. That's all. Is it greater than 5 lakhs? Yes, greater than 5 lakhs. Now, it doesn't matter whether it is in the ordinary course of business or not. It is normally given to everybody. Fine. Still, this is considered to be indebtedness only, right? Disqualified. And if that person is already appointed, then you will call it as vacation of office. Okay, great. Then move to the next one. Ram and Hanuman Associates Chartered Accountants in practice. So really, if you concentrate properly, we would have covered a good chunk of our company audit over the next 50-55 minutes of our class. Come on, pay attention. Keep your attention on. We are kind of going into the depth of this topic. Ram and Hanuman Associates Chartered Accountants in practice have been appointed as statutory auditors of Krishna Limited for the accounting year 13-14. Mr. Hanuman holds 100 equity shares. Oh, only 100 equity shares of Shiva subsidiary. Not too many, only 100. Not 1 lakh, only 100. So I think it is okay, right? This person is eligible for appointment. This person is not disqualified. I think so. No. Disqualified, is it? Disqualified. Why? Why is this person disqualified? 100 shares only, no? Not number of shares. Nitish, you are my best friend today. Nitish says, sir, it is not number of shares. You should consider face value of shares. 100 shares. I'll write like this. I'll bring you into the quicksand a little more. I will say 100 equity shares having face value of rupees 90,000 or 99,900. I'll bring it to the line now. Okay, 100 shares cumulatively having face value of 99,900. I'm repeating my question. This person, has shares worth 99,900. Okay, a partner is having shares worth having face value 99,900. Qualified or disqualified? Or disqualified or not disqualified? Not disqualified. Yes, disqualified. Okay. My dear friends, that is why you need to be perfect with this. Not just okay. All this chalta level knowledge is not enough. Why are you saying disqualified? Listen, okay, now stop. Okay, right, listen. That exception of 1 lakh rupees exception is only for relative. If the person or partner have even a single share. Please understand, if the person or partner, write these points down. If they are not automatic or intuitive to you, please write these points down. If the person or partner have even a single share having 1 rupee face value, still disqualified. Okay, see how easy it is for the examiner to just push you from this corner to that corner to this corner to that corner, right? Come on, just be a little attentive, and then you should be able to crack it well. Okay, right, friends, I hope you understood this question clearly. Is everybody comfortable with this? Can I go on to the next one, please? Yeah, right. Full Yorkers bouncers. Otherwise, why will we have our rapid revision special section, boss? Right. Okay. Relative of a partner. Okay. Okay. I'm repeating that point. I think so basically the question what I was talking about is, say if the question says there is a CA firm A and B associates which wants to be appointed as auditor of PQR Limited. Okay, a partner has shares having face value 99,900 rupees. Is the firm disqualified from being appointed as auditor? You will fall into the trap by focusing too much on 99,900. Oh, 1 lakh tha. So you will suddenly go into 1 lakh. But with that, you are kind of losing the focus on the partner having shares, right? It is not relative of the person having shares. It is the partner. So the point to note is that 1 lakh rupees exemption is there on, or relaxation, let us call it, is there only for relative of the partner, no, relative of the person who wants to be appointed as auditor, not for the person who wants to be appointed as auditor, or not for the partner of the person who wants to be appointed as auditor. So just to be clear, if the person who wants to be appointed as auditor or his or her partner has even 1 share having even 1 rupee face value, then basically you're saying that person is disqualified from being appointed as the auditor of the company. I hope everybody is clear about this. Right. Move on to the next one. Right. B owes 5,01,000 to C Limited, of which he is the auditor. Is his appointment valid? Will it make a difference if the advance is taken for meeting out traveling expenses? Okay, right. What is this question? B is being appointed as auditor of C. B is the auditor of C Limited, and that person owes 5,01,000 rupees. Tell me, do you say this person is disqualified from being appointed? Is this person is disqualified? When the question says of which he is an auditor, when you say that person is already an auditor, what would you say? Okay, invalid appointment already happened. Now what do I do? If invalid appointment already happened, now what does it result in? Yes, it results in the casual vacancy. Very good, immediate vacancy. Okay, right. Okay, and then the question has another twist. No, I never took loan from you. I have to travel to different places to do your audit. For that I took advance. Even if it is that, still this person is disqualified. Okay, however, there is something called progressive recovery of fees. So basically, progressive recovery of fees, if it is progressive recovery of fees, you will not call it advance. First, please understand. Progressive recovery of fees means there are stages. Something like we are doing an audit. After this stage is done, after branch audit report is submitted, we will charge you 2 lakh rupees. After branch 2 report is submitted, we'll charge you 2 lakh rupees. Like that, we started taking fees. Then you are collecting it on a progress basis. Okay, right. Then that is fine. That is not a problem. But any advance, even if it is travel advance, you should not take. Right. On the other hand, you can ask client to buy tickets for you. If, say, for example, the audit is in the US, you have to travel to some other country. For that purpose, the client is booking tickets. That is fine. You are not taking advance from the client, right? So the client is meeting out-of-pocket travel expenses for the auditor. That is okay, right? Then look at the next one. Mr. Fat, auditor of Thin Limited, has his office and residence in the building owned by Thin Limited. Okay, right. Mr. Fat has been given a Shravan Kumar. Focus on the questions here. My T-shirt, if you want, after you clear your CA, you tell me. I'll buy you a nice new T-shirt. Okay, focus on the questions now. Mr. Fat, one person says painting, one person says T-shirt. Instead of except questions, people are talking about everything else. Mr. Fat, auditor of Thin Limited, has his office and residence in the building owned by Thin Limited. Mr. Fat has been given 10% concession in rent by the company as compared to other tenants. Okay, right. So, friends, tell me, what do you make of this question? Somewhere you are suspecting Gopal, Ram Sesha Gopal is suspecting that there is some business relationship coming in. Okay, Nisha, that question is there on page 154 in our material, just for you to be clear. Yeah. Okay. Disqualified and no difference. Okay, right. Friends, here, just again, understand the spirit. The reason why I always ask you why, the reason why I ask you this why is then the logic will get crystallized in your head. So what is this point about? I am the auditor. My office is in the place where my office is owned basically by the client. My office is owned by my client. My client gave me 10% rent discount. Now, you may say, client would have given 10% rent discount to anybody, right? Not just me. They could have given even to some other client, some other tenant who kind of came to this place. But main point is, we don't want these kind of business relationships, because with business relationships, the independence can be affected. Yes. So independence may be affected. So if you think the independence might be affected, then this person should not accept appointment as an auditor. Otherwise, they may accept appointment as auditor. Okay. If you feel that is too negligible and it is in normal course of business and independence is not affected, etc., maybe you can consider. But ideally, you would consider. Why all these gray areas? rather not accept the appointment. Okay, fine. I will not discuss the procedure for appointment of auditor. I hope all of you know the procedure for appointment of auditor as per 139(1), where your auditor is appointed. In the first AGM, the person continues to hold office. Is basically appointed for 5, till the end of 6th AGM, and then the procedure where audit committee, then board. So that procedure I'm not going to do in depth. So I want to go to please come to this term of auditor. Okay, please come to this term of auditor. Friends, here rotation provisions are important. Disqualification criteria super important. Rotation provisions super important, right? So what are the rotation provisions? Normally, if it is an individual CA, okay, if it is a proprietor, then after completing one term of office, there has to be a cooling period for one more term, basically for 5 more years. So after completing 5 years, you require 5 more years of cooling period. If it is a firm of auditors, then after completing 2 periods, means 2 terms of 5 years each, then there will be a 5-year cooling period. Okay, right. So I am repeating, the gist is, if it is an individual CA, then after completing one term of 5 years, there will be one term of cooling period. What is the meaning of cooling period? In this period, this auditor cannot do the audit of this client. Okay, if you already completed 5 years, you can't do the audit of this client. You can do the audit of other clients. Okay, you can do the audit of other clients. That is not a problem. You can't do the audit of this client. Okay, it is very specific, right? Then if it is a firm, then after completing 2, don't say that, after completing 2 terms of 5 years, there is a 1-year cooling period. Okay, right. Now look at this example. This is page number 156. Firms with common partners. Now please look at this question. If firm has just completed its term and proposed firm has common partners, then such proposed firm would be ineligible to be appointed as auditors. Messrs. Krishna and Associates is an audit firm having 2 partners, Krishna and Shyam. Mr. Shyam is also a partner in another firm, Messrs. Kukreja and Associates. Okay. Now basically what is happening? There is a firm. In that firm, there are 2 partners. That firm completed 2 terms of 5 years each. After that, this firm should change, right? This firm should have 5-year cooling period. Suddenly, one partner nicely went and joined one new firm and said, that firm will come and do the audit. If one of the partners of this firm which completed the term of 2 terms of 5 years joins some other firm or has a partnership in some other firm, such firm also will be ineligible for appointment during that cooling period. If A and B, funny, I already discussed Karu yesterday, right? Why are we talking about Karu today? I already spoke about Karu yesterday. Okay, so there are 2 partners. That partners A and B are doing the audit. 2 terms of 5 years over. Then after 2 terms of 5 years, if A or B are partners of some other firm, that firm also cannot be appointed as auditor during the cooling period. After the cooling period, okay, again you can be appointed as auditors. Okay, right. So transitional provisions are okay. They are not. We are not going to touch upon those transitional provisions. Please come to page number 157, case study 7. Okay, please come to page 157. No AGM was held for the year ended 31st March 2014 in XYZ. Neenu is the auditor of the for the previous 3 years. Whether she is continuing to hold office for the current year or not. Yes. Okay. So that person will continue to hold the office till the conclusion of the AGM. So just because the AGM is not held, you will not say that, yeah, we'll continue to hold the office till the AGM is concluded. Okay, right. Please come to page 158, resolution by members. Yeah, right. Resolution by members. Here, look at this. Members may resolve to rotate partners of appointed firm at intervals. Okay, or audit shall be conducted by more than one auditor. Please understand, there is a optional resolution. Optional resolution should not be understood as optional clause. Listen carefully. members of the company can pass a resolution in the general meeting. What is that resolution? They can say, compulsorily for our company, we require joint auditors to be appointed. We don't want single firm as auditors. We want two firms to be appointed as joint auditors for our company. They can pass that resolution. Is it compulsory for them to pass that resolution? It is not compulsory for them to pass that resolution. But understand, the moment that resolution is passed, then compulsorily it should be implemented. When I say optional, it till you pass a resolution, it is optional. Once the resolution is passed, it is mandatory. You have to follow the resolution. Okay, please concentrate, my dear friends. There is a firm, there is a company, and in that company the members have an option. If they want, they can pass a resolution. We want only joint auditors to be appointed, means more than one firm has to be appointed as auditors of our company. Members may or may not pass that resolution, but if they pass that resolution, so if that optional resolution is passed, it mandatorily must be implemented. Is everybody clear about this? Similarly, they can say, okay, we are appointing ABC and Associates as our auditors. Okay, we will appoint them for one term of 5 years. We'll appoint them for one term of 5 years. Maybe our plan is that after that we might even reappoint them. Okay, but the members can say, after every 3 years, after every 2 years or 3 years, the signing partner, engagement partner, we know the concept of engagement partner, right? So the signing partner or engagement partner should change within the firm. So maybe ABC and Associates has 3 partners ABC. So if A is the engagement partner for the first 2 or 3 years, then that person should change and someone else within their firm should become the engagement partner. Now, this is not required. This is not a mandatory clause that the Companies Act asks the members to do, but it is an optional clause. If the members decide to pass this, and if they actually do pass this resolution, which is an optional resolution, then it is mandatory for the company to follow that. Is everybody clear about this? This point regarding optional resolutions? Can you quickly respond? Good. Okay. Right. Now, quickly, let us look at these dates, procedures for appointment of auditors. First auditor, other than for government company. First auditor. Who is the first auditor? Don't say the person who comes and sits in the auditor for the auditor's chair for the first time in the company is the first auditor. That is not the definition. The person who has who occupies the office of auditor till the end of first AGM. Understand carefully. The person who occupies the office of auditor till the end of first AGM is called the first auditor. Okay, so they're actually technically a company can have multiple first auditors. Okay, somebody who holds the office of the office of auditor till the end of first AGM. So maybe the company got incorporated, an auditor is appointed, he died. Another auditor is appointed, he went mad. One more auditor is appointed, he went bankrupt. Something happened. So finally, one more auditor is appointed, and that person is actually the auditor on the date of AGM. So the one who holds office, means in this case, all these people, okay, will be called as technically first auditors only. I hope everybody understood. For a company which is not a government company, the board of directors shall, within 30 days of registration of company, appoint the first auditors, or members may, within 60 days, appoint the first auditor at an extraordinary general meeting. Okay, and the term of office will be till the end of first AGM. That's all. In the box, neatly we summarized these clauses. Please look at those points and master them perfectly. Within 30 days. Within 30 days means the moment 30 days are over, the board's power to appoint the first auditor will lapse. The board's power to appoint first auditor will lapse. If the board does not appoint the first auditor within 30 days, then will the board be punished? Not necessary. Okay, board will not be punished. Okay, from the registration is it. Within 60 days for members means from registration is it. Within 90 days, I said, okay, within 90 days, basically 30 days time the board has from the date of registration of company. If that's not the case, then within 90 days, you have to read from the date of registration only. Within 90 days, the members can conduct an AGM and appoint the first auditor. Okay, now let us talk about the first auditor appointment in case of government company. By C&AG within 60 days of the registration of the company. By C&AG within 60 days of registration. Or by board within the next 30 days. Next 30 days. Very clearly given. So within 60 days from registration, Comptroller and Auditor General of India can appoint the auditor, first auditor. If that doesn't happen, within the next 30 days, means after 60, if you want to smartly remember, greater than 60, less than or equal to 90, okay, greater than 60, less than or equal to 90, board of directors will appoint. Okay, now on the 55th day, can the board come and say, I will appoint the auditor in the case of a government company? No, they can't. Okay, board's power will come after 60 days. Board's power will lapse on or before 30 days. Basically 30 days from that date, means less than or equal to 90 days, the board's power will lapse. Okay, or member shall appoint within next 60 days at EGM. So now you understand how to read that next. Okay, right. So 30 days, first is 60 days. Within 60 days, C&AG can appoint. If they don't, that's when you're coming to the next one. If they don't, then in the next 30 days, the board of directors can appoint. If they also don't, then member shall appoint within the next 60 days. Now you may ask me, sir, what if members also don't? Go home. Okay, if members also don't appoint, go home, because if nobody appoints auditor, how will the company run? So members have to appoint. Okay, right. Now there is a case which is quite self-explanatory. The first auditors of Health and Wealth Limited, a government company, was appointed by board of directors. Well, you know that within 60 days C&AG can appoint. Beyond that 30. After that, for 60 more days you have members power. So you have to write that clearly and say, if the board appointed in any period which is beyond 60 days and less than or equal to 90 days, such appointment is invalid. Okay, I'm repeating. The board's power is greater than, it comes after 60 days and will end less than or equal to 90 days from the date of registration. So in that period, if the board appointed, fine. Otherwise, board's appointment is invalid. Okay, right. Then managing director of PQR Limited himself wants to appoint Shri Ganpati, a practicing chartered accountant, as first auditor of company. Okay, so the managing director wants to appoint. So normally in a government company, we saw the procedure. In a non-government company, who can appoint? The board can appoint, right? The board can appoint in the first 30 days. So here merely appointing is not acceptable. Right. Now come to the next one. Right. Okay. Right. Now in the view of, okay, right. Now please come to page number 160. Appointment of auditor other than first auditor in case of government company. See, look at the attention level. Slowly, now that we have crossed the 1 hour mark, some people will say, sir, enough, sir. I think we learned too much. I think this much in 1 hour is way beyond our capacity. So we will not learn anymore. We will go home. We will sleep. We'll watch IPL. IPL match is also starting. So we'll watch. All that is okay. We have to write our exam by sitting in the exam hall for much more time with greater focus. Friends, please bring your best selves. Okay, come on, stay put, stay focused. Right? Maybe we'll spend some more time, and the effort is to see to it that you become as thorough as possible in the company audit portion. Come on, let's look at this. C&AG, in case of government company, appointment of auditor other than first auditor. So what is the procedure? C&AG shall appoint within 180 days from commencement of financial year in case of government company, or basically the category like other company owned or controlled directly or indirectly by central government, state government, partly, all this. So basically in that category also, you're saying within 180 days, they have to appoint. Who has to appoint? C&AG has to appoint the auditor. Okay, now here is a question. PQR Limited is a government company. Listen carefully to the question. PQR Limited is a government company. The members of the company decided to appoint the auditor other than first auditor, as C&AG has not appointed the auditor within 180 days from the date of commencement of the financial year. Comment. C&AG didn't appoint. Then members said, okay, we'll appoint. What do you think about it? Yeah, C&A, Harish, C&AG didn't appoint. That is why members said, okay, fine, C&AG didn't appoint, so we'll appoint. Nothing doing. Okay, let's get it right. Nothing doing. Here we are simply saying C&AG only can appoint. Okay, clear. You cannot, in company audit, you cannot just assume that is unfair here. You have to have some reasonableness. If they don't appoint, we will appoint. You don't take a stand. Okay, only C&AG should appoint. Okay, you are not writing law. That is the main difference between your company audit and the auditing standards. In auditing standards, you have more flexibility. If you know the principle, you can apply the principle by using your common sense. But when it comes to company audit, you have to stay confined to the points given in the company audit. Okay, right. So we understood what it is. Look at this question. Nixon Limited is a subsidiary of Ajanta Limited, whose 20% shares have been held by central government, 25% by Uttar Pradesh government, 10% by Madhya Pradesh. So basically 25 plus 25, 20 plus 10. So basically more than 50 held by some form of government. So basically it is a government company only. They are appointed. Nixon Limited appointed P as statutory auditor. So who can appoint? If it is government company, who can appoint the auditor? Only C&AG can appoint the auditor within 180 days. Within 180 days from the date of registration of company. Is it 180 days from when? Date of registration of company. Date of registration of company. From the commencement of financial year. Very good. See, don't say from financial year. Financial year means mid of financial year, beginning of financial year, end of financial year. What do you mean? So that is why we should very specifically say from the commencement of the financial year. It's important for you to be precise and perfect. Okay, come on. Let's move to casual vacancy. Come to these points. Page number 161. Filling of casual vacancy. Other than resignation, resignation. These are the two categories in casual vacancy. Other than resignation and resignation. If it is other than resignation, board of directors may fill casual vacancy in office of auditor within 30 days of basically vacancy. Okay, within 30 days of vacancy, board of directors can fill the casual vacancy. If it is because basically I'm talking about non-government company. Okay, so maybe like just to zoom out, government company, non-government company. I'm talking about non-government company. Not on account of resignation, on account of resignation. First, I'm talking about not on account of resignation. Within 30 days, board of directors shall fill the casual vacancy. Is everybody clear about this? Right. Then, if it is a non-government company, if it is on account of resignation, then appointment shall also be approved by general meeting convened within 3 months of board's recommendation. So, if it is on account of resignation, board will appoint within 3 months. General meeting should basically approve that appointment, whatever is made. Okay, right. Now come to government company. If it is a government company, within 30 days, board within 30 days of basically this, you can have C&AG or within the next 30 days by board of directors. Okay, friends, I'm repeating. If there is casual vacancy in a government company, if there is a casual vacancy in a government company, then within the first 30 days from the date of casual vacancy, who can appoint? C&AG can appoint. If not, within the next 30 days, board of directors can appoint. Within the next 30 days, board of directors can appoint. Come on. Now I'm asking you a question. Listen carefully. The first auditor of the government company should be appointed by blank in blank. First auditor of government company. Appointed by whom? Within what time? Very good, very good, very good. I'm glad you're thinking about it correctly. So, first auditor of government company within 60 days of registration, C&AG. After that, if they don't, then in the next 30 days, board of directors. If that doesn't happen, in the next 60 days, by members in the general meeting. Okay, right. This is not first auditor's appointment. This is not first auditor's appointment. This is appointing an auditor other than the first auditor. In a government company, who can appoint? It is not first auditor's appointment. Auditor other than first auditor. In a government company, normally who can appoint the auditor? Quick. C&AG. When? Within what time? Within? Very good. Within 180 days from commencement of financial year. Fantastic. Friends, that's the kind of precision that we need. Within 180 days from the commencement of financial year. Okay, right. Now, come to casual vacancy in a government company. Casual vacancy in a government company. Casual vacancy in a government company within 30 days, who can appoint? C&AG can appoint. If the C&AG doesn't appoint within 30 days, then what will happen? Within the next 30 days, the board can appoint. Okay. Please teach company law. I don't know. There are better faculties who teach company law at Indigo Learn. Please learn from them. Okay. All right. Okay, great friends. I hope we are now fairly clear about the clauses. Okay, right. Now please come to resignation quickly. Okay, stop. Now let's do a rapid revision around resignation. So I hope the appointment process we have a fair understanding of. Come to resignation. Resignation. I just love the energy that we have in this group. Like so much full of energy. People just keep responding, which is so heartening, right? Okay. I don't know how many of you really in physical classes were this participative, but it's brilliant. It's brilliant that you're so energetic and participative even in a virtual mode, right? I wouldn't have probably been as energetic as you if I were a student. I would have just slept and had fun or watched IPL. Okay, right. Now, come on. Resignation by auditor. Now, the resignation, one point to bear in mind, my dear friends, whenever the resignation, please postpone exams, sir. Who am I to postpone exams? Do you think I'm the President of India or Prime Minister of India to postpone exams? Bhanumurthy, please focus on what we are discussing. Okay, right. Now, right. So here, with respect to resignation of auditor, whenever the auditor is resigning, they within 30 days from date of resignation, they have to file form ADT 3. Okay, they have to file ADT 3 with whom? The question is with whom? If it is a government company, they have to file with C&AG company ROC. If it is a government company, they have to file with C&AG company ROC. In other cases, company and ROC, because in other cases C&AG doesn't have any role. So in other cases, C&AG company and ROC. And basically in this, you have to indicate the reasons. Why the hell are you resigning? That's what you basically have to indicate. And if there is a non-compliance, a penalty of minimum 50,000 and up to 5 lakh rupees, the auditor might have to pay. Okay, right? So there are some straightforward points. I want to skip through those straightforward points. Now please come to page number 164. Please come to page number 164. I'm just trying to touch upon some important points. Audit committee, section 177. Forget section if you don't remember it, that's okay. That sentence doesn't make sense, right? Forget section if you don't remember, means if you don't remember only, you can't forget. Forget it. Okay, right. Now let's move on. In addition to listed companies, the following classes of companies shall constitute an audit committee. What are the companies? Public company with paid up capital greater than or equal to 10 crores. Public companies having turnover greater than or equal to 100 crores. Public companies having in aggregate outstanding loans or borrowings or debentures or deposits greater than 50 crores. Okay. So basically, in these cases, you have to have an audit committee. Okay. Right. So there is just a mention around that. Then I want to touch upon one more point. That's a little important one. Friends, can you please come to page number 170. Just in the interest of time, I want to be sure that we are not missing out on some important points. Okay. Right. Rule 11 of companies audit and auditors rules 2014 prescribes that auditors report shall also include reviews and comments on the following, namely whether company has disclosed the impact, if any, of pending litigations on its financial position in its financial statements, whether the company has made provisions. Please hang on, just listen to these points carefully. These are latest editions. Basically, auditor's report should contain section on this. What are these points? Whether the company has disclosed the impact, if any, of pending litigation on its financial position in its financial statements. Then, whether the company has made provisions as required under any law or accounting standard for material foreseeable losses, if any, on long-term contracts, including derivative contracts. I'll talk about this. Whether there has been any delay in transferring amounts required to be transferred to investor education protection fund by the company. Okay, right. Come on, let's talk about all this. This is a new requirement. In the audit report, auditor has to include these. It is a requirement coming from Companies Act. I will give high rating to this. Obviously, if it is the latest amendment, higher chance of it getting tested in the exam. Okay, right. What are the 3 points? Pending litigations. What is the impact of those litigations? Somebody filed a case against us, etc. What is the possible impact of that on our financial statements? That is the first point. What is the second point? Material foreseeable losses and how they have been accounted, whether they have been accounted as per applicable accounting standards loss or not. So basically, say there is a long-term contract, including derivative contract. For example, there is a construction contract, long-term construction contract. On that contract, we are going to lose money. Okay, it's an onerous contract, we call it. We are going to lose money. We have to suffer loss basically because of that. Or there is a derivative contract. We learn about derivatives briefly in our AS 11 also. So there is a derivative contract, and on that contract we are going to lose money. So basically, did we account those things as per applicable accounting standards? Just understand it to that extent. Whether the company accounted for losses as per the applicable accounting standards or loss. Okay, that we need to communicate in our audit report. In our audit report. Then there is money which has to be transferred to investor education protection fund. This is basically when dividend which is declared and set aside does not get claimed by the shareholders. Beyond a point, this will go into, after quite a few years, 7+ years and all, this goes into something called investor education and protection fund. So such amount, it is not simply transferring, doing a journal entry transfer from dividend payable account. You can't simply say, I transferred it to investor education protection fund payable account. No, it is not merely transferring to investor education protection fund payable account. You have to actually deposit this with government. Okay, that dividend should not be with the company. After the prescribed timeline is over, you have to deposit this with the government. Was that done or not? These are the 3 special points which you need to know. Then, duty to report for audit. Please mark this also super duper important. What is this? Report to central government in sealed cover with RPAD. Basically, RPAD is registered post acknowledgement due in form ADT4 within 60 days. Okay. So what is this? Basically, you will write to the board within 2 days. Recall the procedure. You will write to the board within 2 days. Then you will ask them for their reply within 45 days. And if they reply along with their comments, you have to send within 15 days to central government what they clarified, etc. If they don't reply to you, then after the 45 days is over, you have to write to the central government saying they haven't replied, management hasn't replied, board or audit committee hasn't replied. You have to indicate this. And this procedure, whatever we already learned, in fact, I think in one of our previous classes, we already discussed this when we were doing our RTPs. So this is one compulsory thing. Okay, auditor shall attend AGM either by himself or herself or through authorized representative. Thus, it is compulsory for the auditor to attend the meeting unless otherwise exempted by the company. Generally, I would say it is compulsory for the auditor to attend the meeting. Okay. So friends, that's basically about authorized representative is basically a person who, from the firm only the auditor will appoint, who will go and one of the team members may go and attend the annual general meeting on behalf of the auditor. Okay, so these are some of the important points what I wish you learn. Okay, right. So that's a wrap. That's a wrap on this session. Thank you very much. Thanks for all your patience. It's been a good 100+ minutes of this session, and you have been thoroughly engaging with the session. Thank you so much. And as I said, the one small sign of appreciation for if you appreciation or feedback is please give your feedback on App Store, Play Store, Google, wherever you can, and please share what you truly feel about Indigo Learn, whatever it is, with more people. Because as I said, the only person's feedback that matters is yours. Only person's feedback that matters is yours. You are the students of Indigo Learn, and you are the ones who have to rate the experience of the student. So please do us this favor. Go to App Store, Play Store, because that's the norm of the day, and write a review as to what you honestly feel about Indigo Learn. That goes a long mile in helping us and many other students. All right. Thank you very much. Enjoy yourself and prepare with a smile on your face. Thank you. Bye-bye.